everybody, welcome to our market update with Murdock Manwaring Company. We are a real estate group here at Keller Williams Realty East Idaho. Thanks for joining us to talk about what's going on in the real estate market in Southeast Idaho in the month of July. So these will be stats for Bonneville, Bingham, and Jefferson counties for the month of July and year to date. Some really cool stuff going on. What we're going to cover today is kind of an overview of what happened this past month, what happened in the market. Then we're going to do a snapshot, just taking a look at some of the items inside the month. Then let's talk about the current inventory, what's happening right now that will affect our market in the future. And lastly, let's take a little bit smaller look and look just at Idaho Falls. Jeremy, why don't you start us out? How did we look last month?
Let's get her done, Jess. So just in the month, this says June, but it's actually July. So just the month of July in 2023, there was 205, which is more than July of 2022, which is beating the trend. We have been having a decrease in our monthly sales volume in these areas. And now we are actually going up for that 1 month. The other months we were down, but we saw a 3% increase from last year for just that 1 month.
It'll be interesting to see if that trend continues for August and September.
That's right. We noticed here, look at August and July of 2020, where we had 374 houses in just the 1 month, and we're down to below 200, almost below 200. But last year, early this year, 127. Seasonality plays into that a little bit, but also interest rates have made a giant impact of affordability in our market.
Well, this is the slide that is interesting because I've been saying for the past couple months, rates changed last year. When did it really affect us? I think we see here in July. We saw a real drop because interest rates had really skyrocketed. And we see that as you look at this trend. That was a month that was hit pretty hard.
Yeah, that's a great point.
So on this whole graph, if you look along the whole graph, we just keep telling buyers and sellers, we're just going back to normal. All of this craziness above 300 is not normal. So you look over the past, and it would be neat to know over the last 20 years how the graph looks. I would bet you would see a lot less volatility, and up over the 300s was just not normal. So we're just getting back to normal, which is a good thing.
Getting back to stabilizing.
Yeah, that's exactly right. And over time, you can always win at real estate over time. That's what we found. Well, let's look at the price ranges, because this is an interesting area. Everything over 500 has slowed down quite a bit. You can see the days on the market is more than double for everything over 500,000. Under 500, we had 155 homes sell, and the days on the market for that segment of the market was only 24 days on the market. So things are still moving quickly, and the affordability under 500 is still there, but I think that we're really seeing that over 500 being hurt by the interest rate rise, and those price points are harder for people to get to at this point.
And Jeremy, I don't know if we talk about those anymore, going back to that last slide. What's the difference between the days on market on the seller's market and a buyer's market? It is still a solid seller's market. 24 days on the market is nothing. That's right. Practically nothing.
That's a good segue, Nicole. We actually have a slide on that coming up, so stay tuned.
So here's the average square foot for the prices sold in July last year were 177, this year 174. And I think that plays into the last slide, where that higher end market over 500,000, we're just seeing less sell. And so our average price, that doesn't mean that prices are down. It just means the average of everything is going down. So we're seeing a 2% decrease just for that month of July. Year to date, the number of homes that sold this year, here's where we really see the decrease from the previous months. July we were up, but January to June we were down, and so we're seeing a solid decrease in the number of transactions, the number of houses that are actually changing hands this year. Will we continue to see it? Maybe. Are we used to the rates? Maybe. All right.
Should we get used to the rates? Maybe.
Probably, right? Yeah, probably. Average price right now, last year we were at 450 and this year we're at 419. And so once again, with the caveat that that's not, you know, at your price of your house, it's just the average. We're seeing a ton more transact below 500,000 than we are over 500,000. They're sitting there longer, it's taking a longer amount of time, and so our averages are changing. But that is a 7% decrease.
So Jeremy, people look
And
at this,
those-
don't think of it as average value. That's the average price of home sold.
Yeah.
Yes.
Great point. Go ahead, Nicole.
And that also, when you don't have all of those high-end houses selling, we were talking about not having the things up, you know, in the 700,000s. They're not skewing the numbers. They were skewing the numbers before. And so it's, you know, it's correcting.
Yep, that is a great point. Here's the year to date. So about the same percentage, I believe, 7%, where we are seeing the averages go down because of that higher end, I think, is changes some of that. So, all right, who's up next?
Yeah, I'll take over from here. So we're talking now about original list to sold price. So what did it originally go on the market at, and what did it eventually sell at? And we're seeing that homes are going this year, July over July, 97.5% of list price is what they're getting. And that is tightening up a little bit from where we were last year. And in 2021, we were over 100%. And so I think we're seeing some tightening. We are seeing some concessions now, you know, and so that plays a little bit into the factor. I'd say we're overall probably pretty close to the same. The good thing though is we're stabilizing. I think that's a key of kind of what we're seeing in July, is we're seeing some stabilization.
And
So,
and Chad, last year in July, that was a big hit. And I think a lot of people that went to sell had to really pull that price. They were making concessions because we saw that huge downplay in number of homes sold in July of last year. So I think that's why we're seeing this month over month be an increase.
yeah, yep. Yeah, we're getting back to kind of what we have been used to before it got really crazy. So, but it's up 1.9%. Original list to sold, we were at 99.5 last year and now 96.1. So again, we're seeing a 3.4% decrease on that, on original list to sold percentage year to date. So seeing that, and I'd say this is a little healthier zone as well. So.
And a good thing we were talking about before, list to sell does not mean value. That doesn't mean the values have changed. That means that, you know, whatever it's being sold at that's, you know, your value instead of your list price. List price does not equal value.
Mm-hmm. Yeah. And it's a great gauge, because if you see a home that you like that's for sale, you can know on average people are getting about 3.5% off the price. You know, if you're going and offered 15% under list price, I mean, probably not going to get it, and you're probably wasting everybody's time. And so you're still having to write pretty solid offers to get them accepted. So,
and you know, we went over did a CMA today, and we had 4 or 5 homes in the comparables over list price. Mm-hmm. So if sellers are still adjusting and realizing, you know, they can't list high in this kind of a market, and so it's still coming in there, but there are still homes that sell at multiple offers over list price. It all has to do with where you start, and that's the seller's decision.
Yep.
I think one of the myths that our listing agents do a great job at busting is you need to start high so that you've got negotiation space. You know, that's when you look at the trucks on the lot. Oh, they're all priced high, so I can go in and dicker with the salesman. That's not the case, like you said, Chad, anymore. Is listing high is not giving room for negotiation. It's kind of killing you.
Yep. All right, so average days on market is our next slide here. So we are at 29 days last July, and we've gone up to 46 days. And so we've seen an increase there of about 59%. Which, you know, and we feel that in the market. Homes are going a little bit longer and sitting a little bit. And I mean, it's still a strong seller's market, though. That's where we don't want people to be confused. I mean, we're still good. It's just not crazy anymore. It's sustainably good now. So,
and Chad, we have to take that same idea into account, that the high end market is in that stat as well. And when we get to looking at when we break down the days on market price by price, that's probably what's driving our days on market up, are those high ends are sitting.
Yeah. And historically, if you want to kind of get a feel, I mean, going back to 2005, we haven't had this low of days on market since 2000. It's comparable to 2018, and before that, it was still considerably low as what it was for the majority of, the last 30 years. Always pretty much above 90 days. So, and if you look at year to date, average days on the market, it went from 25 to 62, and that's 148% increase as well. Things that are important for us to kind of move into that market, but still don't misinterpret what this means. This just means we're more in a healthier market. It's not a bad thing. It's actually welcomed to the stability of our market.
Because even though they're sitting on the market 62 days, they're still selling for 97% of the list price.
Yep.
So you just have to wait a little bit. And
most homes are really, that are priced right are going within the first few weeks. And the average just takes into account the ones that were listed too high and didn't sell very quickly. So anyway, as far as overpriced and what is the truth, there's some real nuggets here that I think I want to share, some things that I've kind of figured out, but maybe I'll let Jess, kind of take the glory on this one. There's some good
thanks,
stuff.
Chad.
So
you're so generous,
Yeah.
Jump in at any time for sure.
We'll do. Yeah, we'll see. Yeah, you'll probably get it all.
You know what? Let me do this one, guys.
Let's Jeremy have this one out. Well, they make fun of me because I'm passionate about this slide, because this is really the listing conversation. When you sit down,
she made it really
with
clear
a
she
seller,
wanted this slide, so we're having fun with her.
That's right. When you sit down with a seller and you take a look at where do they want to start their listing price, this is really the formula of how you do it. Now, what we've done is we've taken the average home on the market in Southeast Idaho in our counties. This is kind of middle of the road, 2,400 to 3,000 square feet, at least a 2 or 3 car garage, quarter of an acre to half an acre, and a finished basement. That's our average home, our most traditional home. But in your own price point, you want to look at that and do this same thing. So in this past month, our average home here in the 3 counties sold for about $157 per square foot, and there were 12 of those homes sold. Now, last year, this same home sold at $162 per square foot. So if we are now talking, have we lost some value over last year? That is exactly how you would tell. Is your price range changing from last year? And that gives you an idea. Now, those are the sold prices. But take a look at what's sitting on the market under contract. We don't know the final price, but we know what price they needed to list to actually get an offer. Those homes are at $159 per square foot, and there's 28 of those homes pending right now at that average price per square foot. That leads us to the last section that we take a look and looking at actives. What are homes like this sitting on the market not selling at? That's at $158. What's really interesting at this point is this is my first time in a long time to say, we're not sitting overpriced.
This market is
adjusting. Yeah. Really good. So those homes that are active should be moving towards sold. Those homes that are pending are probably going to come down a little bit in price and just settle somewhere in there. But the sellers in this price point have gotten the message and they've got them priced right. So we should see those 32 homes going under contract. And it's been a while since we've been able to see this. Really, really cool. Great job, sellers, in this price point. So let's keep moving through as we take a look, and let's take a little snapshot and look at some of the little things that are happening inside the market. So in July, 308 homes came on the market in our 3 counties. That's actually down 15% over last month. We're seeing a little tightening of inventory. And you'll see that when we look at whether this is a buyer or seller's market, it really has to do with supply and demand. So as we have less homes available, that will drive prices up. And as interest rates go up, that makes maybe people, wondering about, and it starts to tighten our market up. That average list price of those 308 homes were $480,000. And the original list price to sold price, which means they listed and sold in the same month, so they got under contract, that was 98.6. So even homes that went under contract quickly, they still had a little bit of room in there for price adjustment. 269 homes went pending, which means they came as buyer and seller came together on a contract and accepted, but have not closed. And then 54 homes fell apart. So that is where the deal came together and then something happened during the inspections or whatever happened and they fell apart. So I wanted to kind of have a quick discussion about this and with the people on the call. What causes a deal to fall apart? What causes those 54 homes to come apart? Buyer's agents. Why does a buyer want to back out? If a seller's listening to this, what generally causes that?
Sometimes there is a change in interest rate that we saw last week. that you are qualified to buy this average list price of 480. The interest rate changed, and all of a sudden you're only qualified to buy 460.
Mhm.
And you know, your sellers just can't come down $20,000. So
I like it. Anybody else
It's
have
a-
ideas?
Krista has a few right now with inspections and different surprises after it goes pending, right?
Yes, that's what I was going to say. Is definitely an inspection. Sometimes things come up that are just overwhelming to the buyer, so you want to terminate.
Yeah, inspection, excellent. So on the listing side, what we see a lot of times, buyers are worried maybe something came out in the inspection and they want the seller to fix it. And then seller says, I'm not really willing to fix that. And they said, well, we're not going to buy unless you are. And those are things generally that they're finding out through the inspection. Sometimes if they realize maybe their budget wasn't quite right, or maybe they weren't solid on their pre-approval, those deals can fall apart. We aren't seeing as many people saying homes coming on the market and then just changing their mind and running to another house. That kind of happened a little more in the peak, but it's more about what happens. So sellers, to keep your deals together, is you want to have your house in the best condition it can, and also know you're going to have people ask for things on the inspection. You can't expect that the days of they're not going to ask for repairs are gone. You've got to know that, and if a seller's not prepared for that, you're looking for deals to fall apart. Buyers are willing to walk away and find another house. So, as we can see in this area here. Anyone else thoughts? Okay, so let's take a look at what happens with withdrawals. Withdrawals mean the seller
before you jump ahead, Jessica,
Yeah.
it was 2 slides back. You said the average house on the market is 480. That's skewed because of our higher ends. If you go back to the slide before, I would like to know what is our average price for that average house. I think that would be a very valuable piece of information. Right here, the average price for the average house. So right here, it's 157 per square foot. So we could extrapolate and go, 24 to 3,000. That would be interesting to know. Average house, what's the average price? Oh, looks like someone's going to calculate it up for us.
If we take $150 per square foot and times 2,800 square feet, there we go.
439.
There you
so
go.
That's kind of the low end of the average price.
Right.
So only $10,000 or $15,000 off. So those high priced houses are not throwing that average way out
because we sell so many in this area. Exactly right. Yep. Good observation. Thanks, Nicole. Okay, so let's keep moving on. Let's talk about withdrawn homes. So if a house withdraws off the market, what does that mean? Is it that the seller put it on the market, they stayed on the market, and they decided, you know what, I'm not going to sell, and they pulled off the market. We had 46 of those homes withdraw. What's interesting to point out with these is they, on average, sat on the market 104 days. So they waited a while. They weren't willing to drop the price or do what it took to get an offer. And we, at the sold homes sold in about 46. At 104, the seller said, I'm out. And interestingly enough, the average price per square foot was about 193 of the homes that just gave up and said, we're not going to sell. And they were about 95.8% of what they originally started at. So that's a withdrawn home where they can just say, let's move on. Let's talk about current inventory. What's sitting on the market right now? So in Bonneville, Bingham, and Jefferson County, currently on the market, we have 524 homes. 520 homes. Last month, we had 524. So not a big increase in changes of what the inventory is based on last month. The average days on market are sitting at 67 days, and cumulative days are 88, which means it may have gone pending and gone off the market and come back on. If you add all the days up, that comes to 88 days on market. Right now, if you average it out, they've come down about 3% on average of the homes that are sitting on the market, and their average price per square foot is $195. Now, we're going to see that here in the inventory. We're going to see that higher end right now. How much of that might be a little higher price per square foot on those higher end homes? They're selling at about $174. This puts us at about 2.5% of months of inventory. Now, if reason that's important is how many months if we didn't have any more homes come on the market, how long until we were out of inventory at the current rate of sale? That puts us at about 2.5 months. A balanced market is 4 to 6 months. A buyer's market is above 6 months, and a seller's market is under 4. So we're solidly still in a seller's market on average in our current inventory. So that's kind of interesting. Now let's look at how that breaks down. So as you look at our current inventory, the majority of the homes are under $500,000. You can see that, but you're getting almost a half when you start adding everything else up. But if you look over on the right and look at those average days on market, how long have those homes been sitting? You start to look at that higher end above $1 million, especially above 2. That's some pretty heavy days on market sitting there. But if you look at everything under $500,000, you're still, you know, if they're not priced right, they're going to sit.
And this is days on market is from list date to close date.
No, these are
So
days on
that-
market of active homes that have not closed. How long have they been sitting?
Oh, these are the ones that are not closed. Gotcha.
Correct. Correct. So if it's indicative right there of saying just because you price high does not mean you're going to sell. So let's make a little comparison. Looking at the right in the purple, that's sold data. On the gold, that is active homes not selling. So if you take a look at this under 500,000, there's only 1.8 months of inventory under 500,000. So that's a heavy seller's market. You move up from 500 to $1 million. Now we're at 4.1. Now we're in a balanced market. So the buyer or the seller don't have an advantage. But if you jump up above $1 million, there's 42 months of inventory because we only had one home sell above $1 million, but there are 42 homes on the market. So that's a pretty good indicator. If you're sitting above $1 million, you need to be ready to be very competitive because it takes a little while to sell.
About 3.5 years.
About 3.5 years to sell. But it's going to be hard to sell in that market at our current interest rates. Obviously, they're just not selling as much.
Unless you are aggressively priced.
Yep, exactly right. Exactly right. So right here, this just shows how many homes we've gotten on the market over time, month by month. Kind of interesting to see. If you look across July, we had 308 homes that came on the market. If you look, that's a pretty low number. That's a pretty low number historically since 2018 of new homes on the market. So that is keeping our inventory tight, which is keeping our prices up.
Yeah.
Until we have high inventory, we're not going to see those prices adjusting significantly because there is demand.
Zach did make a good point on that earlier. What did you say, Zach, on that slide with the trend?
Yeah, well, if we look at year to date between like January, February, March, April, we're down about 100 houses. But if we look at last month, that gap is closing, which means we're picking back up a little bit.
Yeah, exactly. And it's interesting to see how rates affect that. Do they sell their homes if the rates are higher and go? So that really affects us a lot for sure. Good observation, Zach. So
that also says to me, buyers say, well, nobody sells their house, nobody buys their house in the winter. And we do. We have hundreds of houses that come on the market through the winter.
Yep, exactly right. Exactly right. Currently, we have 313 homes pending, which means they are under contract to buy a house, but not closed. And the average price is $422. So you can look at what's sitting on the market and that price and what came on the market. But right now, pending average is $422. They're sitting at about original price to what the price was when they got the offer, about 97.3%. Average price per square foot, 181. We'll see how that adjusts when they actually close. And average days on market, 55. Chad, why don't you tell us a little bit about Idaho Falls itself?
All right, let's look directly at Idaho Falls. And when we say Idaho Falls, we're referring to the 5 high schools: Thunder Ridge, Bonneville, Hillcrest, Idaho Falls, and Skyline. So homes sold in July, we had 142 homes. It was similar to the previous year. And so we're pretty flat on as far as the amount of homes that are selling in Idaho Falls. Average days on market, 39, and original list is sold 98%. And that's sold. So as far as what's on the market, there are 297 homes, a little less than what we had last year. Average days on market, 86. And so there's a lot of homes that have been on there for a long time. And original list to current, 97. So they're dropping their prices, but I'd say based on the average days on market, there's a lot of them that need to drop it even more. So absorption rate is 2.1 months. So Idaho Falls is a healthy market. We'd like to see some more listings on there. We'd like to see things priced a little bit more aggressively. But overall, I'd say over the last year, we have moved our market into a much more stable market. Hopefully that eventually translates into interest rates a little bit better, but we haven't seen that yet, but hopefully to that point soon. So
So Chad, what that last slide is telling me is, you know, while we're getting to a more stable market, and we're seeing things go in the right direction, we do still have those houses coming on the market where they're a little overpriced, where they're still just a little bit high, and maybe some people need some reality checks, which in my opinion is just all the more reason to have a skilled and qualified agent on your side, just to really be able to negotiate that in for you so you aren't overpaying.
yeah, here's an interesting stat that I was sent a list of production. And from what that showed me, it's that 77% of agents in our MLS have not closed a deal yet this year. And nationally, it's 92%, or the flip side, only 8% of agents have closed more than 4 deals this year. And so, you know, those are kind of crazy numbers. So
It takes skill right now, and
Yeah.
you want someone skilled to make sure, because it's a little bit crazy to navigate this and to know what to do.
Yeah, because
I
if
mean,
it's a seller's market, why are homes sitting on the market for 90 days? Yeah, almost 90 days, 86. So homes on the market, 86 days. If it is a seller's market, that means they should be moving. So yeah, just like Zach said, you need someone with skill and knows where to price it, unless you don't mind sitting on the market for 86 days. Then you can pick
either
whatever
they're
agent you
priced too
want.
high, well, they're priced too high no matter what, or they're just not motivated. So you either have motivated people who don't know they need to go lower, or you have unmotivated people who just don't really care to sell.
And
So-
somehow
would be
think that time
interesting.
on market's going to get them more money, which doesn't.
Right. Right.
Mhm.
That would be
Yeah, and it's
interesting to
proven
know.
it doesn't. You net less the more time you're on the market. Anyway, Nicole, sorry, interesting to know
That's
what.
okay. Interesting to know if how many houses, if they would, because you know, a lot of people say, well, if I would just replace the carpet, if I would just paint, if I would just do this, then my house would sell. But they sit on the market 86 days. Then when the inspection comes, people ask them to do things and they're like, yeah, no, thanks. So that's a good thing to talk to an agent. What is going to make my house sell? Is it just price, or do I actually need to dump some money into my house that I've lived in for 10 years? Do I really need to replace the floors? Do I really need to have the sewer scoped out and all of those things so that I can move my house off the market? If it's priced correctly, and I've had some offers and maybe it fell apart during inspection, might have to be prepared to do some stuff.
If you want that price, or you lower the price for the condition. Yep.
Right.
Yep.
Once.
So thanks, everybody. So
Thanks for
that was the
joining.
stats. That was the stats for the month. And by the way, if you like and enjoy this and you want to get this in your email every month, go to MMC Idaho and click at the top to get the newsletter. And this will drop right in your email every single month, plus a few more fun stats, fun things for your house. So thanks, everybody. Appreciate you. And we will see you next month.